Yeah, hi everybody. First I just want to say thank you for allowing me to talk about this. This is since being an agent has become my passion. So to help people understand it comes from so I've been in the business 8 years, and this comes from having people come in and wanting a quote for their auto or home insurance or their umbrella, and starting to ask questions and realizing that majority of the people that I talk to have really never had anybody explain any of this. And so my goal for you all today, one is just to have you walk away more educated about how to shop for insurance. So I think that it can be intimidating for people. I think obviously it's very important to make the connection. So I want you to walk away today at least a little educated. I mean, this is a huge topic and there's a ton to get into. And it can be boring. So I'm going to try not to be boring. Okay. But I want you to feel educated, and I want you to feel confident, at least that when you do shop, you have an idea of what kind of you're looking for. And then the other thing I'd like to, hopefully you can walk away with, is the connection with your finances and insurance. So I always I don't think that people make that connection. And so from my financial people that may be here today, it never occurred to me until I was an agent. And I always like to use a sports analogy because I think that people can understand that a little better. So if you think about your finances and your financial well-being, I always think about the fun part. So like your paycheck, your investments, all of the really cool fun stuff. That's what I like to consider the offense, right? If this is a sports analogy. And then your insurance is your defense. And we all know defense wins the game. So just saying. But anyway, Thomas is shaking his head, no way. We all know that, of course, what you're purchasing is so important. And so I do have a PowerPoint, and so I'm going to try to share my screen with you just to kind of walk through a little bit of this. And not necessarily that we'll get through a lot of these slides, but of course, so today is how to shop for the insurance. So just a couple things too before we get started. So when you start to shop insurance, knowing the difference, I guess, between maybe what we call as an independent agent and a captive agent. So I work for Untitled Insurance, and prior to working for Untitled Insurance, I owned my own farmers insurance agency. And so I was what they call a captive agent or a semi-captive agent. And that just meant that I had one company that I could shop insurance with. And so that's true for State Farm, country companies, Allstate. So those are what they call captive agents, and they only have one place that they shop for insurance. And then you have independent agencies. And Untitled Insurance that I work for, we are an independent agent. There are many other independent agencies all over. And so typically they have the ability to shop many carriers all at once. And so that's kind of the difference between the two. So I wanted to touch on that too real quick. And also I think sometimes the slides can be a little slow going from one to another. So we'll hopefully be able to roll through this somewhat quickly. The next slide that I have touched on is just a little bit about me. Like I said, I work for Untitled Insurance. I've been doing this now for about 8 years. And so I recently took the position as the personal lines division manager here at Untitled. So I guess that gives me some credibility, right? All right. Next, your home insurance, of course, is likely your largest investment. So obviously a good idea to protect it. Before you shop, I think it's important to understand exactly what you're buying, right? So I think that it's difficult because it's not a tangible product. It's not something we necessarily walk away with. And so I think that can be, difficult for people too. So it's kind of like, well, what is it that I'm buying? I mean, most people understand, of course, that you're buying protection, but I think it's the details that can get lost. I think that the other thing that happens in my industry is that the industry as a whole focuses on price, that's what we shop for. So I think that, every day, all day long, you're watching TV and all you can see is just, price shop, price shop. And I put in here, like, shopping based on price alone is a bad idea. Like, seriously, don't do that. Make sure you kind of understand, of course, what it is that you're buying. And then don't be intimidated. I think once you learn a little bit about, what your needs are, because everybody's needs are different, of course, you can see that it's not necessarily a bad thing, meaning intimidated. So I also like to talk about risk, and obviously, just some vocab here, but risk is just the possibility of loss or injury. So when you're buying insurance, you are transferring the risk from yourself to the insurance company for a premium. So depending on how much risk a person wants to take on themselves, that kind of goes into all of the price as well. So, and of course, there's all kinds of definitions. I guess I can go back to this one, but obviously liable, I put that on there because we talk about liability. Coverage, of course, the value or amount of something. We'll talk about deductible and then the premium. And so the easiest way to look at your home insurance is to, and really your auto insurance as well, is to break it down into two. And so I always explain it to people. If you just take your insurance policy and you look at it as being broken into liability and then the actual product itself. So liability, of course, think about you're on the wrong end of a lawsuit. So in your policy, you have liability protection, and then you also have the coverage that you're paying for. So that's basically what a home policy boils down to. You're purchasing liability, and then you're purchasing the product. And then, so liability portion, you have all different kinds of ranges. So for coverage, so you can purchase $100,000, $300,000, $500,000, or $1 million worth of protection. So think of this part of your policy as somebody comes to your home and they get hurt. Somebody comes to your home and the trip and fall, right? We're all familiar with that. But this could also mean that you've hired somebody to come onto your property to mow your lawn, to trim your trees, to maybe do some sort of like landscaping or just something, put a new roof on, whatever that may be. You're potentially exposing yourself if someone were to be hurt. So I always tell and advise people that if you have somebody that comes onto your property, especially a professional service, it is completely and totally okay to ask them to provide some sort of, to provide proof of their insurance. So it kind of like, takes the liability off of you and puts it on them. So very common. And then not only just ask that they have the coverage, but then actually call. And as an insurance agent, I have lots of, I guess, great stories, not so great stories, but this actually happened to my brother. He hired somebody to come on his property to trim trees. There was a person that got badly hurt as they were performing this work. And it was about a week we thought maybe my brother was going to have a very large lawsuit on his hands. And there's lots and lots more to it. It ended up not happening. It became a horrible type situation, but ultimately I asked my brother, hey, did you ask if they had insurance coverage? He said, oh, yes, I did. They provided me with a card, and on the back of the card it said they were insured. And I said, yeah, but did you call to ask if the coverage was in place? And he's like, well, no. You take somebody's word for it, right? So we called, and the company did not have coverage. It was not in effect. So it was not, it was a horrible situation, but certainly a learning situation and something that I like to share with everybody because it can happen. So just think of liability as that's the portion of protection that you're purchasing in case you're found on the wrong end of a lawsuit. So that's kind of like the biggest way. And then depending on how much protection you want, of course, will help kind of figure, that's how part of the premium is figured as well. So. And then the product, so when I say the product, I say the home product. So think about the home itself, but then also think about everything inside the home, everything like a separate structure. So a shed or a garage or your fencing or a pool and decking, all of that stuff is separate structures. So typically on a home policy, you're going to see The first amount, which is going to be the dwelling amount, and that's the amount that if something were to happen to your home, like let's say your home were completely destroyed, that's how much the insurance company is going to, how much protection you're buying in order to have your home rebuilt again. So the dwelling amount is very, very important. One thing I'll say about the dwelling amount is that it's not, and something that people commonly mistake this for, this is not the amount that you can sell your house for. This is not the amount that, like what's based on your taxes. This is a completely different amount. This is based on the characteristics of the home. So your square footage, the style of the home, all of the characteristics. What's the outside of the home? Do you have brick? Do you have vinyl siding? Do you have a combination? Do you have an asphalt shingle? Do you have a metal roof, right? So all of these characteristics on the inside and outside make up that, what they call dwelling amount. That amount there, from that point, whatever that dollar amount is, and you do want it a little inflated to help for cover. Remember, this also covers like labor as well. So if you had to have your home completely rebuilt at today's labor, at today's cost, so that's why you want to make sure that every year it goes up a little bit just to keep up with inflation. So you have your dwelling amount, and then that kind of sets the stage for all of the other coverages that come after that. So your personal property, your separate structures, your loss of use. Just a note on personal property, as you look through there, you can pull up your policy and you'll see a dwelling amount, and then you'll see a personal property, separate structures, and it'll just kind of go down the list. I highly encourage you at some point, again, I know it's not fun to do this, but if you ever had a loss, you would really have, that's not the time to review your insurance. You want to take a look at it now. Pull up your personal property coverage and kind of take a look at that dollar amount. That dollar amount really is an individual type situation. So I know some people who have very little personal property, and I know people that have a ton of personal property. And the bottom line is this: if your home, if something were to happen to your home and the personal property inside of the home, do you have enough coverage to make you whole again? So typically I find that personal property coverage is typically most people are underinsured on that, just because I think they misjudge just how much personal property they have and if you had to replace everything. So if you think about it, in the unfortunate, horrible situation, if your home were to burn down, you have to replace clothes, furniture, appliances. Just think about all of your major appliances alone. So your washer, dryer, your stove and refrigerator. Most people have a dishwasher nowadays. Just those appliances alone are thousands of dollars. And then clothes. Your clothes that you have, every person in the home has their own kind of stuff. Computers, TVs, right? Like all of the stuff that goes into that. And so most of the time I find that's usually a little underinsured most of the time. But certainly it goes on, everybody's a little bit different. So definitely take a look at that. Separate structures, kind of going down to the next point, that can also be grossly underinsured too. So I remember one time I had a client that we were looking over things, and I asked the question, I said, okay, do you have any separate structures? Do you have anything different in the backyard? And she said, yeah, my husband has a 50 by 60 building in our backyard. Huge, right? And so I'm looking on her policy and she has $15,000 worth of coverage. That is it. The concrete alone wouldn't even, right? Like for $15,000. So just make sure that if you take a look at your separate structures, if you have separate structures, to make sure that, if something were to happen, that would completely be covered. Loss of use. So this is really not necessarily the product, but certainly something if you were to not be able to stay in your home. Loss of use covers for you to stay somewhere else while your home is being either rebuilt or being repaired. So, and this is just a few of the coverages. There's definitely additional coverages, and I kind of listed some of them out there, but like sump pump, water backup. Most of the time, you have to endorse a policy, what they call endorse. You have to add on coverage for sump pump. And so this is one of those coverages that people assume it's covered and it's not. So you want to make sure that if you've ever had some sort of backup into the basement, so sewer and drain, maybe we get like torrential rains or something like that and it backs up the sewer into your basement. Yes, that's very common. It has happened. If you've ever had that and you don't have this endorsement on your policy, there will not be coverage. So most of the time you have to endorse it. So double check that. Flood, I know Thomas mentioned something like that. So yes, flood is not covered on a home policy. So you actually have to purchase a separate policy, a flood policy, to go along with that. Couple other just real quick ones off the top of my head. Ordinance or law. So this is a coverage that you want to put on the home. Let's say that your home was built in, say, 1960, for example, and the home is destroyed, and now we have to make you whole again. They will make you bring things up to code. So when you build, now the codes from 1960 to now, of course, have changed drastically. And so that can be thousands of dollars extra, and you want to make sure that you have that or you feel like you have enough. So let's say your home, if you have a brand new home, you may not need as much coverage because the codes haven't changed as much versus from when your home may have been built. That's also true not on just a complete destruction, but that is also true if only maybe you have a partial loss. So let's say that, and what I mean by that is, let's say that half of the home is destroyed, okay? Let's say it caught on fire and half of the home is destroyed. When they start putting that half that's been destroyed back together, the city is going to make you put the other half that was not destroyed up to code as well. So even though it's only one side, they're going to make you have everything up to code. So you just want to make sure that you have, first of all, that you feel comfortable with that amount. Typically that amount goes in like percentages, so you want to make sure you have that. One of the things I want to go just back to real quick is the loss of use. So loss of use can be a big deal for a couple reasons. One, you want to make sure, so anybody that knows anybody or had a situation in 2013 with a tornado, that was for some people, I mean, it was a terrible situation to begin with, but this in particular, this coverage, not everybody got rebuilt within a year. So most of the time, this coverage, most of the time, it has a 12-month term or a 24-month term or a dollar amount. So kind of whichever of those comes first. So if you think about the tornado in 2013, I mean, it happened in November. It was bizarre that we had a tornado in November to begin with, but that happened in November. And then obviously we don't typically build homes in the winter around here. So some people had to wait in order to get their home like started in the spring before it started. Well, if you couldn't live in your home for November, December, January, February, this loss of use has been kicking in this whole time. So it's possible that you would run out of coverage, your home's not built, you still have to make the mortgage payment, and now you have a rent payment. That can devastate somebody financially. So it's just something to take a look at and to discuss with your agent as you're walking through that, and just, talk it through and make sure that it, kind of makes sense at that point. And so first of all, understanding your premium, tons and tons of different characteristics that make up the premium. So the biggest thing that I want people to understand is that in the state of Illinois, we use credit. Credit is a huge portion as to why your premium is what it is. They take into consideration if you've had any past claims, obviously your home, so the characteristics of your home, the zip code that we live in. I know that's crazy, like to think about that, but just in the zip codes that we live in, zip code determines a lot of times even what the premium is. And then the last thing I'll say before we take any questions, because obviously I could go on about this, is if you have any updates on your home, if you've made any updates, if you've bought new appliances or something like that, always a good idea to go back to your agent and review your policy just to make sure that you've got plenty of coverage. So, okay, I'll stop sharing my screen now. There we go. Hello. So does anybody have any questions?
I do. As it pertains to flood insurance, because ours is through FEMA, Does it do other insurance? I guess with other policies, does it matter like what parts of the house that is damaged, or does it cover the whole thing?
So, and you're talking about specifically flood insurance, right,
Right.
Thomas? Yeah.
Yes.
So, flood insurance, and what I would tell you to do is to specifically ask, because they're different policies are going to have different coverages, and so it can potentially, and you want it, so kind of like on a homeowner's policy, I tell people too, I typically sell what we call a replacement cost
I have a
policy.
very light route tomorrow, so. Oh,
Oh, I'm sorry.
I'll mute her.
Oh.
No, go ahead. She
Oh,
was
okay.
unmuted.
No problem. So there's different kinds of policies that you can purchase, okay? So typically when it's your home that you live in, your primary residence policy, you want a replacement, it's the replacement cost on the home and on the contents. But that's not always the case. So you can have a policy that's replacement cost on the home and then what they call actual cash value on the contents. You don't want that typically, right? I mean, you want a replacement cost, meaning that if you have a TV that's hanging there, I don't know, a 30-inch TV or something, I don't know, 32-inch, right? I don't know what they come in, but like if you have a 32-inch TV and it gets destroyed, you want another 32-inch TV, right? So that's replacement cost. So not all the time does that happen. I have seen policies where, and this is on a primary homeowners, where they'll have replacement costs on the dwelling, but then the contents will have actual cash value. And the reason they'll do that sometimes is because it will lessen the premium. So this is why I say don't shop on premium alone, because you never know what you're going to get. And if you don't know what you're looking for, if you have a loss, I mean, that would be devastating for somebody. So...
Yeah.
And this is why this has become such a passion for me. And again, I know, like, Noelle, what a weird passion, right? But like, for me, I think when I see people coming into the office and I'll ask questions and they just don't know. I mean, this isn't something that we don't teach this in high school. We don't teach this. All we are told is that we have to have it and that, here you go, kind of thing. So I just think it's an ethical thing with me, I guess, right? Like, help people understand what they're buying. Buyer beware, kind of thing.
Cool.
So.
Thank you.
Yeah. I don't know if I really answered your question. Flood is a completely different animal. And we can kind of talk about that too if you had specific questions. But yeah, it can be different. Same thing with earthquake. Earthquake can be completely different. So.
I probably am interested in having my home reviewed. We've had our home insurance for the same place for a very long time. But your comments remind me when I was in my 20s, we lived in Florida. When I came back here, we carried back our insurance that was written in Florida. I got in a car accident. I was at fault. I didn't know until then that the person the ambulance chaser, the lawyers, was going to sue me. My portion for that was nothing. Thankfully, they settled for what I had. They didn't really want to fight that bad. They just wanted some money. But
Heather, this is exactly why I want to just tell everybody. So when I say thank you for allowing me to help educate you, like really, I just want to tell everybody, it's like, you find something out and you just want to go tell your friends, oh my gosh, you guys, check this out, right? So I can't tell you how many times, Heather, that has happened. And I mean, I don't know, I have an auto presentation, and in the auto presentation, I talk a lot more about liability because of that, because you're more exposed on your auto policy, really, than you are your home policy, because you can control who comes on your property, right? With your home policy, you can control that a little bit better. When we're driving down the road, who knows what's going to happen, right? If we're going to accidentally hurt somebody or somebody is going to hit us, and then what if they don't have, right? So liability... and there's tons of examples to use, but that's why I said the connection with your finances, where, insurance is your defense. And so if you don't buy enough protection, if you don't have enough coverage, your assets are up. If you were to horribly injure somebody in a car accident or kill somebody in a car accident, if you don't have enough protection, all of your assets are up. So if the judge says, yeah, you were, it was horribly your fault kind of thing. And, you know, he can pass a judgment that says you're going to get your investments, your home, everything. The only thing that they cannot take from you is the contents of your home and your life insurance. That is it. Everything else is up for grabs. Your kids' college, it doesn't matter. If you have assets and you don't have enough protection and you're found on the wrong end, you are potentially in trouble. And the other thing about that too is that, just real quick, a lot of people, we think if you get into an accident, there's one person. You have to remember, what if you hit somebody and there are several people in the car with bodily injury? Or you hit somebody and it's a chain reaction and now you've damaged 3 vehicles. Or you've run into like a building, it's slippery, it's icy out, you can't control it, and you run into a Little Caesars, right? Or something like that. So there's a lot that kind of goes into that. But yeah, unfortunately, Heather, those can be scary things. Anybody else? All right.